Hello and welcome back. This is David from the Personal Finance Squad. Okay, what we have in front of us here is a budget sheet template. This is the sheet that you will be using throughout the entire book if you have not done so already. If you're working with another budget spreadsheet, that is certainly fine with us. All we care about is the fact that you're budgeting. Okay, so let's take a peek about the build out of what we have here. We can see right off the bat that this budget is based on a bi-weekly paycheck schedule, because you can see there's 2 paychecks, and you can see that there's $1,000 in the account. So balance in current bank account would mean that this is probably a beginning of a new month and there's money left over from the last month. And you have to understand that this is a simulation, it's not real time, so we have to take some liberties here. Bank accounts are never at zero if you're managing money. You're going to have ins and outs all the time. So at the beginning or the end of your month or during the whole time, you're going to have money in there in most cases. So that's why we just did it here to show a scenario. Now when you have a base budget sheet, if you're going to keep recycling the sheet and starting it over every month, then really this would be 0 here. And then just for example, we just throw an other just to balance it out. You'd look something like this, or this income would be higher. So the whole point is that we have 0 here. So let's push this back real quick. Okay, so you can see right here that all of this is added up. You can see the formulas in here, and if you know how to use Excel, this is familiar to you. So that adds up to $8,100. We see the balance left on account again is $1,000, and then it'll add up the subtotal, and that's $9,100. Then we can see the remain is $9,100. And you can see right here that all the colored lines in here are adding up everything that's left over. So the income versus expenses when you start your month out or end your month should always be at 0. You need to get there, even though you're going to be constantly getting this back to this number here. Okay, so now let's look at some other things on here. We have the due column. We've hidden them over here. We just wanted to show you for purposes of this exercise. If you have automatic billing, which most of your bills should be, you might not want to see these columns. It's just your choice. Where it shows non-applicable, that means you're paying yourself. A supplemental item for like miscellaneous could be in here. $100, you're paying that to an account which is supplemental. So we wanted to show you that for that purpose. Other things you can see here, the highlighted areas. You have a little key down here that says can be supplemental. So childcare and clothes and groceries, these are things that we went through the book, for example. Most often you're going to have some money that goes in there. If your groceries balance out as $750 as it shows there, you don't need to put anything as supplemental. So you can see other things here too. Gas utility, gasoline, this is the gifts that we talked about. This would come up in the gifts expense tracker that we provided on the site for you. Spending money, certainly, if you come under your spending money, you can roll that over to something else in your supplemental and just keep saving cash if you want. We have leisure items. So you can see some of the things in here, they're just built out for whatever you want. So again, these are optional, and these supplemental items here in lavender are items that you know are going to go into the supplemental account. So for example, kids' grades here, that's something that some people decide to put money away, and if they do well, they take them out to dinner or give them some cash or buying something, right? We've talked about license plates, oil change for maintenance on your car, the salon. Maybe Jasper doesn't get his haircut for every 2 months, so it's going to be $40 and he puts $20 away. Salt for a water softener, that would be somebody who has a well. Satellite radio. Now taxes here. The reason this is in here, some people, when they have their taxes done, end up with a big return. And so some people decide to change that when they talk to their CPA or look through, like, say, their Quicken account and find out I'm getting all this money back, and maybe they change their exemptions so they get more money in their pocket every month. So what this would mean here is that you're being undertaxed. So if you're undertaxed, you need to put money aside here so that you can balance it out. So at the end of the year, you're going to owe money, but you have the money put aside for it. So these are 2 items that we'll have another video on, a tutorial on. Just wanted to throw this in here because some people have to make sure they have to have money for their taxes. It's very important. Taxes on your home. So this would be somebody who's paying their taxes and insurance for their home on their own. It's called paying outside of escrow. Then you have trash. So I pay for trash service personally. Travel, we saw Jasper do that. So he's just throwing this into a bucket so he has money to pay for trips, of course. We see the vet, and there's a water bill. So we know that this means this bill is probably going to be quarterly or biannually, for example, or trash for me is quarterly. Sirius satellite radio is quarterly. things of that nature. So it just depends. This is what you work for your budget. Other items we see, credit cards. Now, the way these two are built out is that it says no INT, and that means no interest. So we're putting it up into the scenario as if you're charging every month to pay some bills, but that means you're not making sure that you're paying the statement balance off. So remember, when we talked about a credit card, you have to make sure you manage the card and bills with it. So you have to balance it out. So let's just say, for example, that clothes were $213. That leaves $87 for this amount, but you find out that it went on the credit card. So that means you're going to have to balance that out. So all of a sudden this would be $213 is your predictor, or that's your current balance for the statement. But really, if you took another $213, it would be $426, right? And you can see that it's still zero over here because it went on the card. You have to move the money around. But you can see that the $426 is still owed. So at some point, you're going to have to pay that like every other bill. All you're doing in this case to this case is transferring the money. Okay, so we're back to zero. Now let's look at bonus checks. So let's say the wife is getting a bonus check, and so that would be $22.50. That's a bonus check month. We like those. And now you can see really you would end up with $22.50 as your starter. This is how your budget month would start out. So if you want to balance that out, you can do one of two things. You can type in other or checks or whatever you want, and you can actually just type it into here. Got to make sure that the formula works, so you can see that this added it up, right? And if you go to the remain, you can see that it's captured it. And then you just run it. So what else you could do is just not even do this. You can say I'm starting off the month at $22.50, and if you have the available cash, you can just pay off the supplemental right away. You could sit there and just simply take this money right here and throw it into the account. Probably the simplest way to do it is when you get that third check, it's going to be at the end of the month. So by the time you get to the end of the month, all of this here would be exhausted, right? You'd have this left over. All these bills would be paid. This would be at zero. So when you get that last check, immediately you just take that and you transfer it over to your other bank account, which would be your supplemental. Of course, if you plan on spending some of that money, then spend it and then take the leftovers of that amount and put it into supplemental. And we also talked about bonus checks in that you can spread that out over 6 months if you want, because usually it's 6 or 7 months between two bonus check months. So you could take this money, divide that by 6, and for example, you could add this into your spending money. So maybe you want to increase this every month, you want some more play money. You could do anything you want. That's why they're bonus checks. We just want to show you that what it would look like if you stuck this on there and how to manage that money. Okay, we see another item here, miscellaneous income/payments. Now, for example, that could be a rebate check. So maybe you bought something, they gave you $50, so you would have an extra $50, and again, how you choose to use this money is up to you. Perhaps Jasper's mom pays for some daycare to help out the cost, so she could have $100. And that's $150. These are reasons budgets change a lot. They're never exactly the way you line them up when you start. You have to work with the base of what you have, and every month you're going to have some other miscellaneous items coming into here. Perhaps your mom gave $100 for birthday. So there's all kinds of examples that could be tied to this. Now sometimes, on the other hand, you might find out that you're paying for something temporarily. Perhaps you decided to pay for a grill. So let's say the grill was $200. So we could put in grill. And now you can see that the leftovers are negative $200, and this is not a good thing, right? That means, of course, you have to balance that out. So figuratively speaking, Jasper could come over here and lower his savings by $200, and you can see that there's a balance of 0. So these are things you have to continuously do. You don't always know what's going to happen. You predict, you can come very close, but sometimes things change. Sometimes your electric bill comes in way, way low that you know you're so under even your mark, you don't want to chuck some of it in supplemental. So you have it at 85. Let's say you predicted you would have no added cash needed in the exercise, and you find out that consistently for 3 months, even on your lowest months, you would thought it would be 50, but it comes in at 34. Maybe this is extra money you didn't account for. Sometimes people say, hey, I want spending money for $20 a week for lunch. Maybe Jasper says, I'm going to take out $20 because I like to buy coffee every day. So he goes to the bank, he withdraws 20. That would leave $9.80 here, for example. He's got 20 bucks in his pocket, and he finds out for 4 days he didn't drink coffee for some reason. So all of a sudden he still has that $20 in his pocket. So he doesn't have to give this money back here. It's just sitting there. It could be the end of the month and he still has that extra 20. So again, you don't have to balance it out that way. The money is already in his pocket. Okay, let's talk about FSA and DCAP. This was covered in the book extensively, and you have options on the way you want to handle this. So if we put FSA right here, for example, and let's say it was 60, then you would find a health item in here to match it. But we do not. So what this means for this budget, the FSA part for the health expenses are being handled outside of the budget. The FSA is its own supplemental account. So that means every bill that comes in, it's just handled by the FSA, which will have its own debit card. So for example, if I went to the doctor and it was $30 for the copay, I would simply swipe my card at the doctor. The item would be covered and everything's good to go. This is similar to like a 401k. When you take money out pre-tax, you don't see it in the budget, but you know the 401k money shows that it came out of your paycheck from your stub, and then you can see the 401k money in your account. So let's look at DCAP for a second. Let's just say it was $200. Now what has to happen is it needs to be all moved around, meaning the money. So that means 200 was taken out of here, 800 comes out of here, right? And now you still see a leftover balance of 200. But really what happens is money comes into your DCAP and comes out of your check. So what would really happen in real life is this check, for example, might be $2,050. Because remember, DCAP is pre-tax. So that means if it's coming out of your check and going into account, you can't see it figuratively. So that is like its own supplemental account again. So the point is, even though you really can't see it here, is that you can list it here if you want because you want to track it. So you have your 200, you pay 200, that's cool. And that means you took $200 out of the account, which we did, which was at 1,000, and it went to 800. But if you have money, again, in your account for the DCAP account, that means money has to be paid into it. So that's why you see you can list 200 here. That means that money would have to come out of a paycheck in order to balance it out. So it can get a little tricky. This is why people will choose to not list their childcare or their health expenses in the budget if it's covered by way of putting it into the FSA, into the DCAP. So again, that's entirely up to you how you want to manage it. But there are other accounts that you have to do a little more work with. Okay, rollover month. We went through that in the beginning of this exercise, and you can see that that would mean there's always going to be money left over, like we said, in the account or a bill that might not be paid, for example. And that means you're always going to have to manage that money. So let's just say, for example, that if you have $1,000 in here, that means something probably wasn't paid. For example, let's just say you had your credit card and you get to the end of the month and you didn't have anything on it. And so you can see there's $1,000 left over, right? Then you go spend $1,000 and now it goes to zero. So you still have $1,000 in your account to pay for the bills. Remember, some bills might clear at the end of the month. Sometimes I have my life insurance that's supposed to come out on the 29th, but it doesn't flip over to the 2nd. And then in the same month, it comes out on the 29th. So you actually have 2 transactions in the same month. So it can happen. And again, there's always going to be money coming in and out, as I keep mentioning, but budgets are very fluid, they're very flexible, and they're very demanding. So you have to continuously move all this money around to balance everything out. Expenses for taxes, we talked about this earlier, and we will have other videos on that. Again, this is just to have money put aside in case you're going to owe. And if you have an accountant, that person can tell you the kind of money you're going to need to put aside so that you balance out the money you would owe to the government. And that's what I do with my wife. We want all the money in our pocket, not someone else's, which is our credo. So we know that we're going to owe some money because it's not an exact science to get to zero like your budget would be, but we know the kind of money we have to put away. So when the government says you owe, for example, $1,000, that money would be sitting in that account and everything would be fine. When biweekly payments, we already talked about that. So there are 2 months a year with the bonus checks. So that's covering everything that we have in here. So if we go over to the supplemental sheet, we just put a little example in here. And you can see the types of things that can be supplemental and that are supplemental, which we had in colors. And we know the ones in lavender came over no matter what. So here's a good example. We can see that, let's say we go down to satellite radio, and we can see right here that we have 21 and 21 equaling $42. Now when you get to a month when the bill is due, all of a sudden Sirius says, hey, the bill was due. So all of a sudden $63 comes out of the account. And then we have serious up here, and you have to balance it out. So what you need to do is say, okay, well, I have the $42 there. I put the 42 there, and I'm still negative 21, but you can see that 21 is owed. So what you would do is cancel that out. So when the bill is paid, you've pulled the money in here already, and you just zeroed this out. And that's how you balance out expenses that occur for your biannual or your quarterly payments. Okay, so we can see everything is listed by month here, and the way that this budget started was actually in July, not in January. Remember, when you budget, you start from the beginning of that cycle when you figure out your year's expenses. It's not in the January time frame. Now, you can certainly go to January and redo things. It's good to keep an eye on your budget, but for the most part, once you start managing this, you don't need to start over. You don't need to say, I'm going to start in January again. You just keep budgeting, because remember, you're doing it for a year's cycle. So what you can do, though, is say, I am in January, and a lot of times things change, such as medical costs. Sometimes things for school go up in price. Sometimes maybe your daycare goes up in price, and they do things in the January time frame because it's the new year. So that's why it's a good exercise to start right here and recheck everything. You can see that we have childcare here, and we have $25 and we have $87 for these months, and it auto calculates it for you. It will also auto calculate for you here. So you can see that you have an option here too. You could sit there and say, I just want to put in one column. You could get rid of all of these columns right here if you wanted, and you could delete them, and you could just keep a running total. You wouldn't even need this column. What you would really do is get rid of this, and you would just have a running total, and you could just call this total. Whatever works for you. So let's pull this back real quick. Some people also just want to see what they've done every month. They want to see consistency. They might find that some months are higher and lower for other reasons. Some people just like to see, it's kind of like that snowball effect of paying off credit cards. You like to see progress. So it's up to you in the way that you want to manage it, but you can see that this is very easy to manage, and if you ever want to add something, you can insert a column right there and just say sample, and you can put in 40. You can see that it added it there already, right? Because it drags the subtotal down. And over here, of course, it's going to have to generate it. And there you go. That's going to wrap it up for here. This, again, is a very fluid document. Budgets are going to take a lot of maintenance. And if you're building this out as a student, you're going to have to get help, again, from your instructor and your parents for the types of bills you need to put in here. And if you're an adult, you're certainly going to have to go and look at your 3 to 6 months to start, especially all the way up to a year, to understand the expenses that are going to be incurred so that you can build all of this out. So if you follow these little keys in here, make sure that you understand your supplemental items as well, and you will be very successful. And if you want to use another spreadsheet, for example, that's out there, then certainly do that. We just want to know that you're budgeting. That's going to finish it up for here. We thank you for joining, and we will see you in a future video.